Okay, once again, good evening to everybody that is here connected this evening for this class. The essence of doing this class today is because of the long time we'll have to wait till the next class. The next class happens to be the last class for this series. For this series, this is what we actually have done. We started with what is Forex. We did the psychology of traders and the Forex trader psychology. We talked about the game of support and resistance. Then we talked about the Japanese candlestick. We talked about drawing trend line, both uptrend and downtrend. We talked about Fibonacci's and how the ABCDs are formed. And that's why today, I'm sure one of the most popular thing you would have heard in my teaching is ABCD. Okay, so we see the entire piece of trading the forex market in the form of a game that starts from A and ends in D. And then that game is repeated, over time. Then we talked about Fibonacci retracement and extension in the uptrend and also on the downtrend. We talked about how the larger time frame controls the smaller time frame. This was where I made the analogy of a mother and a baby in the womb who determines where to go at a particular point in time. And we talked about indicators generally, just for the purpose of developing your personal strategies. And then we talked about the 7 irrefutable keys of executing a successful trade. We also talked of the we talked about the King's Crown. Okay, we talked about the King's Crown. We talked about time frame relationship. So these are all the items we've covered from the start of this training until date. Okay, and one thing is to do all this. Yeah, it's beautiful. It's nice to go through all the training, and I've also shown you some websites that I consider, okay in terms of trying to build on the knowledge that you've already gained. If you want to consolidate on that knowledge, there are several websites that you can, go to. But I've carefully selected a few of them for you. The likes of Baby Pips, the likes of the Trading Channel, No Nonsense Forest, um, the Wise Trade, and I've told you that of all of them, Wise Trade is my most preferred. And I've also recommended some videos for you to watch. Then among them is also Traders DNA. If you have to trade with indicators, if you have to learn how to trade with indicators, two of the sites you want to consider is Traders DNA and No Nonsense Forex. But if you are using No Nonsense Forex, you cannot watch video 10 and come and watch video 5. You have to watch it from 1, 2, 3, 4, 5 to 90 something or so until when they fully unveil the strategy. So that's just a quick recap on what we have done. So now one thing is to go through all this training and understand it. Then another thing is to apply it to trading in the market. So we have different type of candlestick. So what you are seeing on my screen right now is the Aiki candlestick, right? Then conventionally, we have the conventional candlestick. This is the conventional candlestick. So this is what you see. Okay. And now, if you look at the conventional candlestick, you see the wick. So we talked about the features of the candlestick. We talked about the wick. We talked about the body. We talked about the high. We talked about the low, and then we talked about the open, and we talked about the close. And as a reminder, we said if the candle closes above where it opens, it's a bullish candle, and if it closes below where it opens, it's a bearish candle. Okay. Now all these are knowledge base, right? And I also made mention that of all the indicators today in the forex market, the most precise indicator is the candlestick. The candlestick is actually an indicator, okay? And what it does is that every other indicator follow it. Now, number one is the most precise indicator. Number two is the determinant of price. It shows you that this is the price. Like right now, this amount, this value you are seeing here is the current price of this currency pair. This is USD CHF. This is the current price. It's determined by the candlestick. Okay. Now, you also need to know that before the advent of candlestick, some persons have traded this market with bars, they've traded it with lines, with different. So all those options are still available. Okay. But candlestick is preferred because it is assumed to give more information, when talking about the high low volume. So if I put my mouse on the candle, I want you to look at this down area. Yeah, after this default, there are 1, 2, 3, 4, 5, 6 bosses. Now, once you put your mouse on the candlestick, those bosses are filled with values. The first one is the date and time. The second one is open. So this candle that I am now, that value you are seeing there is the open price. The issue you are seeing there is the high price, which is this high, the very top here. Then the C that you are seeing is the close price. Then the V is the volume, that is the total transaction that happen in the candle. Okay, so then this one is the low price. This L is the low price. That's this lowest point. Okay, so those are the features of the candle. So candle tends to give more information that you can use to make a trading decision. Okay, so now the real essence of this class is I tend to observe that one thing is that we have the general idea. Then secondly is that people find it very difficult to have entry into the market, and even when they have entry into the market, they find it difficult to sustain that entry or to determine where to leave or to enter or leave the market. Now, if we use the Fibonacci tool, you all agree with me that the exit from the market is actually the extension, while the entry are actually the retracement. So we always tell you, any instructor that is teaching you Forex, we always tell you to wait for the market to pull back. Wait for the market to pull back. But sorry, the network in Port Harcourt is kind of bad since 2 days now. I don't know why, but you guys will just bear with me. Let's see how we can manage it. Okay. Um, where did you guys stop hearing me? Let me be sure I know where to start from.
I think you were talking about the relationship of candlesticks, entry points, making a decision on entry the market based on what the candle is saying, how people find it difficult to sustain their position in the market.
Okay, perfect. All right.
Things
Thank you. Okay, so because of that, mainly because of that, I want to do, like an expose, and that expose is for you to know when the market is pulling back. Okay, so every time frame, this is a 30 minutes time frame, right? So every of the time frame you see in the market, starting from the monthly, the weekly, the daily, they all have their individual activity that is going on in all the time frame, and these individual activities are accounted for by the ABCD price movement. Okay, so there's always going to be an a B, a C, and a D. Okay. And whenever the market gets to D, that sequence tends to that sequence will repeat itself. Okay, because that is one way for you to know that the market is trending. But now, even though the market is not trending, if the market is in a consolidation mode, you will still, whatever movement the market is making is still going to account for the ABCD price movement, but maybe in a smaller range or smaller moves. Okay. So now what I want you to understand is this. I want you to look at this chart, and I want you to see that this market move from this point to this point, and then the market stopped. And then the market now moved from this point to this point, right? And then it moved from this point to this point, and then from this point to this point. Now, one thing I want you to know is this. Look at this chart carefully. Look at this first movement. Okay. Watch this first movement that the market did going up. I want you to see that the markets, okay, let me rephrase it. I want you to see that when the market, okay, let me delete this one first and use a horizontal line. I want you to see that when the market start to move, it starts from a support. And I want you to look at the two candles, that are at that support. So for a support, you have a bearish candle that is followed by a bullish candle. Remember, when we started, our definition of support was low. There's such a thing as low of support, and there's such a thing as support. Okay, the low of the support is the wick. The support itself is the body. I don't know if you guys got that. The low of the support is the wick. The actual support is the body of the candle. Okay, so for this market to go up, you cannot have a situation whereby the market goes up, with maybe bearish. Maybe the first candle is bearish, the second candle is bearish. No. So you will have the first candle to be bearish candle, okay, and then you will have the next candle to be bullish candle. Then if the market moves to resistance, the first candle will be bullish candle, and then the next candle will be bearish candle. I want you to get that point first, okay? Now, if you have that point, now this is the same for all the time frames, okay? For all the time frames. So one of the big problem we have in the forex market is that people don't know when the candle stopped, and people don't know when the candle, start to move. So now, if you look at the market, if you look at this area, look at this movement from this place to this place. Okay, let me put from this horizontal line to this horizontal line. I want you to see that every of the candle that starts from this bullish candle to this last bullish candle, I want you to see that they are moving in a slant order, as in every candle is diagonal, as in they are moving in a diagonal order. Okay. Now I'm going to explain it to you. They are moving in a diagonal order. Why? Because the close of the next candle is higher than the opening of the previous candle. I'll take it again. This is the previous candle. This is the next candle. The close of this candle is higher than the opening of this candle. Now, in as much as the close of this candle is higher than the opening of this candle, this market will continue to go up. But anytime the close of this candle comes lower than the opening of this candle, it means that the bears are taking over the bulls. Okay? And vice versa. If I hope you guys understand what I'm trying to explain.
Yes, we do.
The close of this candle so if the market is going up, let me take another place so that for more clarity. Let's take this place. Okay. This market start to go up from here. Every candle, it doesn't matter whether the candle is bullish, whether the candle is bearish, provided the close of that candle is not below the opening of the previous candle, that market will continue to go up. But if the close of the next candle is below the opening of the previous candle, that market is changing direction.
Can you please show example of that?
Let me show you an example. This is an example. Let's take here. I'll put a trend line here. I'll put a trend line here. Okay. I want you to see this move. So I'm taking from this candle. Look at this. This market came down and then followed by a bullish candle, even though the bullish candle is small, right? So the market starts going up from here. From where the market starts going up, now I want you to really understand this thing, because it's going to change your knowledge of how this market move. This candle where I have my mouse right now is a bullish candle, right? Do you agree with me that this is the close of the bullish candle? You can unmute and respond.
Yes.
Do you agree with me that
Yes.
this
Yes,
is the opening of
Correct.
this bullish candle? Okay. Now
Yes,
on this
correct.
small candle, this small candle, this is the opening. The top here is the close. Okay, let me make it easy. Let me take away the wick. Okay, let me take the wick out. So remove the wick. Colors, bar up, none, bar down, none. So now there's no wick. Does it make sense now? There's no wick. So now you are seeing the open and the close. Just ignore the wick. Just assume as if the wick, pretend as if the wick does not exist. Okay. So now we're only looking at open and close. So this is the opening of this candle. This is the close of this candle. Right? Now, I am telling you that in as much as this opening, this closing of this candle is higher than the opening of this previous candle, not its own opening now. I'm not talking of the candle itself opening, I'm talking of the opening of the candle before it. In as much as the close of this one is higher than the opening of this one, this market is set to go bullish. Okay? Meaning that the market is going to be bullish. Now, subsequent candles, their closing will be higher than the opening of the previous one. So this is the close of this one. This is the close of this one. It is higher than the opening of this one. So this is the opening of this one, right? And this is the close of this one. This close is higher than this opening, right? The next candle is a bearish candle, right? And the close of bearish candle is to the bottom, right? So the close of this bearish candle is this bottom. But the opening of this candle is here. Even though this candle is bearish, for the fact that it did not close below the opening of the previous candle, the next candle that will come will be bullish. I don't know if you got me. The next candle that will follow will be a bullish candle. And it will continue like that. And when it's moving like that, you see that the market is in a slant direction. You see the candlestick, they'll form a slant shape. But when the market want to change direction, you will see that the closing of the current candle will be lower than the opening of the previous candle. So let's take example here. This place here where the market change direction. So this closing, this is the closing of this bearish candle. And this is the opening of this bullish candle. For the fact that this bearish candle closed below the opening. Can you hear me?
Yeah.
Yes, we can hear you.
Okay, for the fact that the opening, for the fact that the closing of this bearish candle is lower than the opening of this bullish candle, it means that the market has changed direction. It means that the bears has taken over control from the bulls. That's the meaning. Okay, so when you see, for instance, you come here, you see here, you see this bearish candle. The closing is lower than the opening of this bullish candle. Get ready to sell. You see this one? The closing of this bearish candle is lower than the opening of this bullish candle. Get ready to sell. The same for this. The same for this. So it tells you the market has changed direction. Okay?
Nice.
Does it make sense?
So, Patrick,
Yeah.
Patrick, when it changes that way, what does it mean you are losing money?
No. It
Is it
doesn't
what
mean
it means?
no. It doesn't mean you are losing money. Okay. So let me throw more light. So in this market, there are two ways you make money. You make money when the market is going up, and you also make money when the market is coming down. But for you to make money, if the market is going up, you have to. So let me open this other notification. So this dialog box is where you take your trade, where you place your trade. So you see, it says sell by market, there's a buy by market, right? Now, if your action is a buy, and then the market is going up, you will be making money. But if your action is a buy, and the market is not going down, you'll be losing money. If your action is a sell, and the market is going down, you'll be making money. But if your action is a sell, and the market is going up, it means you'll be losing money. So if you take a sell, and the market is buying, it means that the market is going contrary to what you say the market will do. So at every point in time, let me zoom this down a little bit. If for those of you that has followed my class from beginning, you will agree with me that as we speak right now, this place is a resistance, right? This is another resistance. This is another resistance. Okay, and then this is another resistance. Okay, then we can spot one more. This is another resistance. Okay, now when you see that the market is making lower highs, resistance can also call this resistance, because this resistance is lower than this one, we call it lower high. This it means that this is a high, but this high is lower than this high. So we call this one lower high. The next one is also a lower high. The next one is a lower high. The next one is a lower high. The next one is a lower high. Anytime you see that the market is making lower highs like this, it means the market is actually selling. Okay, and you can use this lower highs to know when the market changes direction as well. Okay. You know, I told you guys that this network is a serious problem, right? We'll just manage it. Okay. So I was trying to explain something. I wanted to say, if you look at this move that this market made all the way to the upside, okay, you can spot all the, so when you draw, I can come here and draw a line here, right? And say this is a support. Now, the next support after this support is this one. The next support after this support is this one. The next one after this is this. The next one after this is this, right? Now, so this market is going up, ascending this support. So it climbed from this one to this one, climb to this one, climb to this one, climb to this one. Now, we expect that it will climb to another one, but it didn't. Instead, the market came and break this support. this time, when you see that the market has come and has broken this support, you were expecting that, okay, the market will go up and then to create another higher support. But instead, what did the market do? The market break this one and created a lower support, lower than this one. So what does that tell you? It tells you that the market is changing direction. Usually what the market will do is to come up and test this resistance here. So this last resistance before the last high, if the market breaks this support, the market will come and test this resistance. I remember explaining these things to you guys in our reversal class. Okay. So this is what the market will do. The market will break the trend line, we take out the A, and then we'll come back and test this place. Okay. So when this happens, you say the market has changed direction. Now, when the market changed direction, now, remember when we are going up just now, we're doing support, 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 right? But now this time, the market has changed direction. So what we are going to be seeing now is resistance, resistance, resistance. Okay, all those support now, they are no longer useful to us. Now we have switched to resistance. So now we're now watching to see how all this resistance are going to get to a level where the market will break the resistance. So like for instance here, the market created the resistance here, right? And then the market breaks that resistance. And somebody would think that, oh, the market has changed direction. This is one of the places where the market is deceptive, okay? I want to think that, oh, the market has changed direction. Yes, you will think the market has changed direction, but you are going to also think of something. To your left, there is a support here. And the market is coming to test this support. Coming to test this support. So even though it breaks this resistance, that doesn't mean that the market has given you 100% change in direction. The market came back to this support, and this support is holding, and then this support causes the market to fall down again. So it continues, in that sell mode. So this sell will continue until the day this market will do something like this, something like it did here. Okay, it's going to repeat it. So the going up is a case whereby you see that all the support, the market is responding to the support, and then if the market is coming down, is what is keeping resistance. So even though the market is going up and is keeping the support, one thing you need to know is that the market is breaking the resistances. Okay, so all the resistance on its way when the market is trending up, the market will break them. Take for instance, here is a resistance. The market came and broke it. Here is a resistance. The market came and broke it. Here is a resistance. The market came and broke it. But you see, there is a support that is holding the market before the break. There is a support that is holding the market before the break. So all those support that are holding the market before the break of the resistance, that is what you are watching out for the market to break in order for you to start selling. So every action of the market that you are taking from year to year is that you are buying. Why this one is that you are selling. Okay. So, but we've talked about indicators. And I've told you that one thing the indicator will do for you is to enable you develop a strategy. Okay. Develop a strategy for yourself that you will use. Everybody must not have exactly the same strategy. Okay. And I've also showed you guys how you can develop this strategy. So I will just show you my strategy. So if you look here, I have, these are templates of strategies, right? Now these different strategies that you see, they are for different time frames. So if you come here, you see hourly, you see 30 minutes, 15 minutes, you see 4 hours, 4 hours each for daily, weekly, right? So these are my personal, so these are strategies that I developed for myself to be able to trade this market. So with these strategies, I can put a condition. And let me just show you one of such strategies. So I've shared something like this, in the WhatsApp group, and I'm sure you guys have seen it. So if you look at this, okay, so I'll just take it from here. So if you look at this, there are moving averages. Don't worry, don't be confused. I'll come and break it down for you so that you understand it. There are moving averages on this chart. And these moving averages, they are not rocket science, okay? They are things that people understand. All you need to do is to take your time and do it. So what you see is the one that I've already done and I'm using and it's working. In this my strategy, when this black line, see this black line, when the candles are above this black line, it means the market is trending up. When the candles are below this black line, it means the market is trending down. Okay? Candles above the black line, market is trending up. Candle below the black line, market is trending down. This is one of the quickest way for you to identify your trend. If we go by this, we will have to do something like this, right? We'll have to come and say, draw trend line. So I will not draw trend line until my market has done A, B, C, D, right? So that's when I have the leverage to draw trend line, because my trend line is a connection between my A and my C. So if the market has formed A, if the market has formed B, the market will form C. Okay. The market will form C and then form D. So this is your C, this is your D in this instance. So once I've seen that the market has formed D, I will now come and pick this trend line too. Pick the bottom of the A, connect it to the bottom of the C. This is a trend line. As at when I'm drawing this trend line, all these candlesticks, they've not been formed. This one, they've not formed. When the market go bam, 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 give me D, yeah, I draw this trend line. Now, when I draw this trend line, I'm not going to start waiting for this market to come close to this trend line. Okay, when the market comes close to this trend line, anytime the market reaches this area where the trend line is, I'm going to be looking for candlestick formation. So what are the conditions that will make me to say, okay, I can buy this market? Number one, I will draw a counter trend line against this trend line, connecting the eyes. Counter trend line. Okay. So this counter trend line, when this market here, when it gets to this, remember when the market now gets to this trend line here, this is the original trend line. My A and my C is a continuous line. When the market now comes back to this line here, I'm looking for a trading opportunity. That the market has got it to the line doesn't mean that I have a trade yet. Okay. I'm looking for an opportunity to trade. I'm looking for the market to show me either a candlestick formation or the market needs to show me something. Okay. So in this case that we have at hand, we see the market came down and gave us this bullish engulf candlestick. But this bullish engulf candlestick did not break this trend line. So I will not take the trade until this candle that breaks this counter trend line. So after the candle that breaks the counter trend line, then I can conveniently come and enter my trade. Okay, after this break. So I can take this trade. And I take this trade, I can now stay on this trade to the next D. Okay. So if you use your Fibonacci tool, this is your A to B here. Okay. This is your A to B here. And we say your take profit is at 161.8. The market gave you a reversal at the 38.2 level, and the market run to 61.8 and it stopped. And then it pulls back. Then you are now going to put another Fibonacci, starting from this place that was C to this place that is now D. And then the market gives you this reversal at the 38.2 level, meaning that the market will move at a minimum, it must go to 161.8. And then the market goes bam, bam, bam to 161.8. So this is your entry. This is your take profit. So let me put a line there. Say this is our entry. Okay, there's a line already. And then this 161.8 is our take profit. Do you see how the market nicely moved there? If you put your this to calculate the pips, that's about 200 pips of movement to get to 161.8. So you can know ahead of time that this is where the market will get to before it will pull back. Okay, if you did this one, if you start with this one, A, B, C, and you see the big bullish engulfing candle, that one immediately it breaks the trend, it breaks the counter trend line, and you have close to 70% of that candlestick above the counter trend line. Okay, so because of this condition, you can buy this market from here and put your take profit at 161.8, and you see how the market nicely move to 161.8. So this thing we are saying, we can do it over and over again. Okay, and you get the same result. So this is how the professional traders are able to tell you that you will enter at so point and you will close your trade at so point. Okay, or you will leave the trade at so point. But then every movement to see is a pullback. Okay, and I want to believe this explanation that I did here. I want to believe, confirm to me if you understand this explanation. When I drew this trend line from here to here, I want you to confirm to me that you understand this trend line that I drew first. If you understand this trend line that I've drawn, then this movement from this point to this trend line is what we call the pullback. Where most traders have problem is that they are not able to wait to see this pullback complete. They are not able to wait. If you're able to wait to see this pullback complete, let me even do that with the current market. This is the current market. From the market is coming from up, right? The market is coming from up. The market is coming from up. So this is the highest point the market got to. And then the market zoomed down. Anytime the market breaks the support before the high point, or it breaks the resistance before the low point, you can call this place your A. And then the next high after the break of this point is your B. So you say this is A and this is B. Okay. And then the market pulls back, okay, to C. So we say this is A, B, C. Okay. Now, at this point, once the market has started moving, you see that the market has started moving and the market has broken this place. The market has broken this line. Okay, okay, let me put it this way. If the market breaks B, once the market breaks B, draw your trend line. You cannot come and say, this is your trend line. You cannot draw this. Okay, and say, okay, the market has formed A, has formed B, it has formed C. When the market breaks B, it means that the C is confirmed. That means this is your C. Okay. Now, I said, when the market breaks this B and the market comes down to D, draw your trend line. Then after you have drawn your trend line, allow the market to come back close to the trend line or touch the trend line. So the market comes back. So there are two ways. You see that the market comes back all the way and hit the trend line, or the market come back all the way to this your B. Now this is your B. This is your B area. Okay, either the market comes back to this area or it comes back to this trend line. And then when it does that, you are going to look for a candlestick formation. Candlestick formation. So once you see a candlestick formation, or you see the condition that I told you before, I said when the market is pulling back like this, every of the alternate candle the preceding candle is closing higher than the opening of the previous candle. So as this market is closing higher than the previous candle like this, when you get to that point, when you now see that this one closes below the opening of the previous candle, you know a sell has come. And now, you are not just seeing this from anywhere, you are seeing it from a previous support zone turning into resistance. You are seeing it from previous support zone, and then you see your trend line is very close to your trend line. Maybe by the time you apply the wick, maybe the wick is touching the trend line. Okay. Then from here you have a sell. This thing happened. Let me see. Control Y. So this is 1 month, right? Between these two dotted lines is 1 month. So in the last 1 month, this market has been selling, started selling from here, okay, till date, okay. As of today, this market sold from here to here with, that's 21 days with 436 pips. 436 pips. Okay, so now, I mean, this is just to show you how you take advantage of the entries when they shows up. Okay, that's one way. Okay, another way. Yes, go ahead.
Excuse me.
Yeah.
There is a bit of difficulty or maybe confusion or rowdiness. Now, from the topmost top there, where the bullish candle hit that hit the line.
Yeah.
Yes, that place. You know, that is supposed to be our A.
Correct.
Then the B, you know, we now have like double bottom. That is the confusion. You know, one wouldn't know where to place the B actually, whether the first one or the second one. And the same thing too happens with the next support. Yes, that one and this one. Yes, and the second one that is a little bit, yeah.
Okay, wait.
Those
Just hold
two,
on. Just hold on. Let me
you know,
clarify you.
those two.
Let me clarify you. Let me clarify you. Let me take you to one of our lecture.
I like this chart. This is the problem I've been having.
Don't worry, I will clarify you now. Just 1 minute. Let me get Fibonacci retracement and extension in a downtrend. That's a downtrend. So let me use downtrend. Okay. Let's see this. Let's see this. I'll just quickly take you to. I'll take you to these 6 ways that the market, you know, retrace and extend in the AB boundary, right? So we talked about this. Do you remember this?
Yes.
6 ways the market retraces. We talked about this, right? Now, I want you to see the one you are talking, what you are talking about now. I want you to see it is condition number 2, where the market gives you an A, gives you a B, the B attempt to move back and then comes back below the B, okay, and then moves back into the AB boundary. This is the condition that you are seeing here.
Yes.
This is the same condition you are seeing here. So if you have this lecture in your head,
that is number 2.
It will not confuse you. Yes, this number 2. That chart you are looking at now, it bears witness with this number 2 condition.
Number 2, okay.
You see it?
Yes.
So when
Yeah,
I want you to just get something straight in. First of all, understand that the market will not do this. Look at this. Between here and here, this is resistance. This is support. In between this resistance and this support, there can never be resistance or support. So if the market has done resistance and this resistance, the market came down, has broken the last support before the market went up. I said, this your resistance is your A. And the next resistance that the market form, the next support the market form, after it has broken this support, is your B. Take it that way. Don't do any adjustment. Even if the market has to come out of it and go back into it, it's not a problem. This is your B. This is not your B. This is not your B. This is your B. Because this is the first support after this resistance. Do you understand? And that's why I try to bring out this thing for you to see.
Yes.
So this is your A, this is your B, this is the resistance, this is the support. This is the first support after the A. Okay? But the market attempt to push down, but because it's not his time for it to go down, he came back into the AB boundary to go and look for C. Telling you that this place that the market moved from to go down is not a valid C.
I can't hear you.
It's telling, can you hear me? It's telling you that this place,
the network is bad.
Can you hear me? Can anybody hear me?
Hello, sir. Your network is bad, though.
The network is pretty bad.
We'll do fasting and prayer for this network. Oh.
We can't hear.
Yeah, because the network is getting bad. Sorry, apologies. The network is very bad. Just 1 minute. Let me see. Plus, can you guys hear me now?
Yes, sir.
Yes, I can hear you.
So the network is very bad. And like I told you before that I'm not sure if the network can allow us to do this class. I don't know what they have done to the network. This is 5G and it's misbehaving. And every other network in my house is not working. I'm trying Glow. Glow is not, I can't even get anything from Glow.
I think it's an intentional thing because of what is going on in the country presently. Not all the networks are misbehaving somehow.
Yeah, all the networks are bad. From when they announced the protest, they start the protest now. The network has not behaved well. Let's see now. We'll just see how we can manage it. It's just that it's going to mess up the recording.
Pato,
Yeah.
Pato, Patrick,
Yes, I can hear you. Hello.
Patrick,
Yes, I can hear you. Go ahead.
Patrick, can you hear me?
Yes, I can. Sonny.
Okay, there's a network called TZT. It has a unlimited TZT.
TZT.
This TZT.
Is it available in Port Harcourt or where?
They are in Port Harcourt here.
Tizeti, I
People can.
contacted Tizeti
Okay.
that they should
You
come
say?
and I contacted Tizeti some time ago and I asked them that was even before I bought my MTN 5G. And I asked them to come because they said they need to do some installation. Do you know, I called these people,
Yes.
followed them up, called, and their customer service was very bad. Very bad. That was why I didn't use them. I called and called and called. I was not
The
wondering. I was not
demand is
wondering.
more than their supply.
So that was why I couldn't install it then. Maybe I'll need to check them again.
Me, when I paid, it took almost 2 months before they booked me for the installation. I paid and they told me when they will come and install if I am comfortable with it before they come. It took 2 months before they came for installation. So it takes time. They have a lot of people in their backlog to install. So, but it's very, very efficient. 10 people can connect in the Wi-Fi, 12.5. And you can download the whole Nigeria. Nothing will happen.
I'll check them out again. All right. So
okay.
It's been around for a long time. I know them long ago. They are not new. Both TZT and Starlink, they're available, but just to get them to come and do that, it was a problem. That was why I just ignored them. All right. So yeah, we're trying to explain the confusion. Yeah. Okay. So when you see, so there are some things that you used to know that the market is giving you a C. And one of such thing is when the market comes to a region where you have previous support or previous resistance that is turning to support or resistance. Okay, what am I trying to say? So yeah, this is your A, this is your B. Your ID C will probably come from around this area where you have this resistance. Are you seeing it? Yeah. So on this side, you are looking for a candlestick formation in this region. Now, in this case, the market did not give you candlestick formation. But you see what the market gave to you? The market, even though this candle is a bullish candle, this small candle, the close of this bullish